Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Tuesday, July the 7th, the year's 2020. Let's talk trading. Trading step by step. Today, step two. Yesterday, step one, we talked about risk. Today, step two, what we're going to talk about is brain management. But before we get started, just remember, these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. So, step two. Step two, brain management. Okay, like I said, yesterday we did risk management. Today we're going to talk about brain management. And this could be the most important step, but see, they're all important. You take away any one of them, and the stool's going to fall over. Point being, if your brain isn't right, as in Cool Hand Luke, if your mind ain't right, there's no system, there's no risk management that's going to help you. You know, they say the market's driven by fear and greed, right? People are greedy, people are fearful. It's like a lot of people talk about FOMO, the fear of missing out. So you rush in, you're probably getting in late, or you're probably getting in too early, and you wound up with a loss. It's like, what can you do about it? Well, what you have to do is you got to take one step back, and you have to think about why you're trading and what result you want from trading. Well, I mean, most people say, well, isn't that obvious? TRO. Come on, we trade because we want money. We want to make money. We want to buy a Lamborghini or a Ferrari or maybe just a Miata like you, right? Well, sometimes there's a little bit more to it than that. You get into that. That's why I say you have to read books about psychology, about how the brain works, because you get into these deep things sometimes where people, traders, they get in there and they start trading and their brain just goes on tilt. They don't think straight. In fact, there's one buddy out there who, I don't know, I think he blew up another account just this week. And I said, why are you trying to do this alone? Why are you doing this with, $10 a pip if you can't make money with $1 a pip? I mean, what is going on? And another trader said, what's your plan? Is it written out? Do you know? It's like, it sounds like you're just kind of trading, willy-nilly, seat of your pants. You're just, and the poor guy didn't really have an answer. He just says, well, maybe I'm not cut out for trading. And I told him, I go, trading is a skill. Skills can be learned. Okay? You just have to be a little methodical about it. You have to take the logical steps. So you got and brain management, getting your mind right is a step. So what does trading mean? Okay, let's look at the parts. You've got money. It's like, what does money mean to you? Is it the difference between having a place to live, having something to eat, or is it just something extra? You have to answer that for yourself. What does losing mean to you? Is it a blow to your ego that, oh, if I take a loss, I was wrong and somehow your status is diminished but it can only be diminished by you. It's not like trading's a spectator sport. You sit there and you got a bunch of people looking at you. I mean, it's just pretty much between you, your broker, and the account statement they send you. So, I mean, when you get in a trade and it goes against you, do you assign it meaning? Because if you do, there's your mistake. Doesn't mean a daggone thing. The market doesn't know you, doesn't care about you. It's just going to do what it does, with or without you. And it doesn't do anything to you. All these people talk about stop running and all that. I mean, I got +1 a couple of times today. And it's funny because I can almost see it happening. I can almost predict it happening. You get in a trade, you're up +5, you move the break even to +1, and then the candle closes, the next candle, opens, and then all of a sudden it goes against you, comes, takes out your stop, and then goes right back the other way. I mean, sometimes that happens, but then again, I did a BE +1 trade earlier. It came within 1 point, then reversed, and I think it was like the big win of the day. Literally 1 point, and if it moved one more point against me, would have taken me out at break even +1. But I know that that's just how the market moves sometimes. It goes up, it goes down. Sometimes it hits my stop, sometimes it doesn't. But you have to be able to accept that. Because if you assign any meaning, if you've got fear, if you've got regret, if you do any of that, then you're going to feel pain. But the thing is, it ain't the market, it's you. It's coming from your reaction to what the market's doing. So basically, you kind of have to be inert and not react to what the market's doing. Not from a brain standpoint. You have to do it from a process or procedural standpoint. In other words, if the market goes to your, break even +5, then automatically you move your stop to break even +1. If it goes to break even +10, you move your stop up to break even +5. And if and when your stop gets hit, you don't do any of these. You don't think about what you could have had or what you left on the table, even though it's like when I talk with Walmart, I'll say, oh, I left pips on the table again. But that's not really true. It's not true at all. But if you frame it that way, you're setting yourself up for what? Pain, your reaction. So focus on, hey, you know what? I did exactly what my trading plan says. I moved my stops when I was supposed to, and it worked. So, I mean, we could really get into some more brain management stuff, but that's like one step. Maybe we'll revisit it in this series. But I say this stuff and I show this every day. You can't do that. And the worst one's the regret of being stupid, just doing something that you shouldn't have done, or not doing something that you should have done. Just do what you're supposed to do and don't do what you're not supposed to do, okay? Now, let's see. Oh, we still have 3 pairs that haven't filled the gap. The pound dollar here is 31 pips over the previous week's high. It's moving up nicely today. You can see here, once again, here's that opening range for the month, that first day of the month. You see we opened right below it, came down, didn't break out of the previous day's low, but turned around, broke out of that opening range high, and at the moment, 70 pips above it. And there's your yesterday's high. It broke out 39 pips above it. So if you took either one of those trades and sat in it, you're sitting kind of nice. Once again, simple horizontal line trades, trading with the candle color at the line. So you can see here, daily. What's the color here? Green at the line, go long. It's not difficult. It really isn't. You put your stop loss in based on your risk. And then either you get stopped out for the loss that you were willing to lose. And that amount, something I don't know if I mentioned it. Whatever your stop is, if your stop gets hit, you should be able to shrug it off. You shouldn't feel any pain taking whatever pip hit or whatever dollar hit you took, whatever that loss is. You should just be able to roll with and go, you know what, I'll get it back and then some on the next trade. That's got to be your attitude. You can't let whatever that amount is, it cannot devastate you. It can't devastate your account. It can't devastate you emotionally, mentally, psychologically. So if you're trading and your stop is going to have that kind of effect on you, then you need to reduce your risk amount so it doesn't matter. So if that amount is 10 bucks, 1 buck, 100 bucks, whatever it is, you should be able to take that hit, shrug it off, and say, you know what, I'm going to get it the next time. So month up by 162 pips from the open, week 100, day 75. So we got 3 green days in a row there. At monthly inside bar, price dipped inside it once again and moved up, now 87 pips above it. And another simple horizontal line trade. That's it. That's all it is a horizontal line trade. Now, in this case, we're looking at the daily, and the daily would have been red there, but maybe if you drop down to H1 or M5, you might have found a green candle to go with. Sometimes you take chances. Remember, some rules can be bent, some can be broken, just like in the Matrix. Now, today, all the pound pairs looks like are, with the exception of the Euro pound, are over 100 pips in range. Interesting, the pound Aussie, 168, pound CAD, 203. In fact, I took a pound Swiss short. I think I made a couple of pips off of it because I was short the pound and they were both, and I was looking, it's like, hey, usually if one does it, the rest are doing it. They kind of move in a gang here because we got the pound as the base currency. I'm sorry, we got the pound as the quote. No, base. Quote in dollars. Sometimes I have to remember which one comes first. B comes before Q, so base and quote. And you can see here, we took out the pivot, which was right near the open, so there really wasn't any bias. We got near the weekly open and just took off like a banshee. 1, 2, 3, 4, 5, 6 hours in a row. Now, once again, notice something very simple. That horizontal line, previous H1 break, winner, 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 winner. Simple horizontal line trades. Trading doesn't have to be complex. Red Rats, get ready for a feast. 116 pip range. That weekly pivot, maybe we're not going to hit it this week. It's not looking good at this standpoint. On the daily, we took it out as I just showed you. In and out of the wick zone. I mean, once again, simple horizontal line trade there. Here's the weekly high from 1 week ago. We took that one out. The daily high from 1 day ago, we took that one out. I showed you those before. Once again, candle colors at the line, 3 ball at the bottom, green at the line, green at the line, green at the line, green. You see even red at the line, that was profitable. Here, green at the line, here, green at the line. So that one kind of pulled back, but it never threatened your stop. So once again, simple, simple, simple. So fellow traders, you've got to get your mind right. Brain management, stare at that screen, figure out if you have any of those bugging you because you have to get rid of it. Because remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. And if you're new, click subscribe, click like, click the bell, and share the video all over the internet. Rumpled One, signing.